So you have a small Forex trading account and you wish to grow it by scalping. And you're looking for the best day trading scalping strategy that you can use. I see a lot of traders overcomplicate their trading and add like 5 or even 10 technical indicators, thinking that more indicators equate to higher win rates. If that's you, then this video is just for you. Because in this video, I'm going to show you the best day trading scalping strategy, which has a pretty solid win rate. I will show you step by step and provide you with a couple of case studies, so make sure to watch this video till the end. And no, it's not going to involve 5 indicators or something mind-blowing. In fact, for you to be effective in this scalping strategy, I need you to unlearn what you already know and keep it simple. At the end of this video, I'm also going to throw in a secret sauce that can further increase your win rate when scalping. This is a tip that enhances the win rate for scalping strategies, and you can use this tip even for other scalping strategies. So you definitely want to stick around till the end. Before I dive straight into the strategy, I would really appreciate if you could smash that like button and subscribe to the channel. It helps support this channel so we can keep serving you in the highest capacity possible. We also do a giveaway worth $99 for every single video. If you are keen to participate in the giveaway, look for an emoji in this video and comment the emoji plus win Forex signals. You can also refer to the pinned message in the comment section for more information about the giveaway. Now, because this is a scalping strategy, we will be using the 15-minute time frame, as we will only hold our positions for a short time. For this scalping strategy, we will only be using 2 sets of exponential moving average indicators, a 50-period exponential moving average and a 200-period exponential moving average. This is not a breakout strategy where we trade a breakout. Rather, this is a retracement strategy where we wait patiently for price to retrace to the exponential moving average and look for signs to get in at the best level possible. Most traders struggle with identifying key support and resistance levels. And the beauty of this strategy is that you are using the exponential moving average as dynamic support and resistance. Hence, you don't need that much experience to pull it off. The exponential moving average gives you the exact level to look for a potential trade. But if you are more advanced and know how to read market structure, trend, and price action, you can integrate this as well. So basically, there's something for everyone in this video. Here's an overview of the steps involved in this trading strategy. I will go through each of these steps next, so keep watching to find out the exact things you need to consider. Step number 1. Check Forex economic calendar for news event. Step number 2. Determine directional bias by looking at the 200-period exponential moving average. Step number 3. Wait for price to retrace to the 50-period exponential moving average. And step number 4. Look for price action confirmation and enter upon confirmation. Because this is a scalping strategy, it is very important to make sure that you are not trading into a news event. Your stop loss for this strategy will be quite small, so any news event could trigger your stop loss easily as the spread widens. For this reason, this is the first step of the strategy, checking whether there is any upcoming news event. You do this by using a Forex economic calendar. Many websites offer this, but I personally like the one at forexfactory.com. So if you visit the website, you will see something like this and a ton of economic news releases. Now, what I'm about to say is very important, so pay close attention and keep watching. You don't want to pay attention to every single piece of news. You want to focus on the high impact events only. These events are marked in red, and you can see some of them here. So what you want to do is apply the filter so that you will only see the high impact events. And when a high impact news event is happening in a couple of hours, you want to avoid trading that currency Again, I will reiterate that this is very important because we will use a tight stop loss and you don't want to get stopped out within minutes because you didn't know that a news event is around the corner. So that's step number 1. Now moving on, you want to insert 2 sets of exponential moving averages into the M15 chart if you have not already done so. 150 period and another 200 period exponential moving average. This step is rather straightforward. You want to observe where price is relative to the 200 period exponential moving average. If price is above, you only want to buy, and if price is below, you only want to sell. Do not go against the direction of the 200 period exponential moving average. There is no reason to go counter trend if you are still a struggling trader. Focus on identifying the easy setups and making money first. And if you really must, you can move on to counter trend trades once you are profitable. Moving on to step 3, you want to patiently wait for the price to retrace to the 50 period exponential moving average. One thing to note is that this setup will be void if price breaks through the 50 period exponential moving average. Let me show you what I mean. Here, we want to be selling as prices below the 200 period exponential moving average. But we see that as price retraces, it breaks the 50 period exponential moving average. In this case, this setup will be void unless price starts dropping further and breaks the 50 period exponential moving average. Now, suppose that the 50 period exponential moving average holds. Then we can proceed to step 4, where we look for a price action candlestick pattern to enter our trade. This could be an engulfing pattern, a piercing candle, or a pin bar. In this channel, we have many videos on these patterns, so check those videos out if you have no idea what I'm referring to. For this video, I'm going to assume you know what I'm referring to. Once we have spotted a price action candlestick pattern that confirms our trade idea, we can take the trade and set in the stop loss and take profit target. So those are the 4 steps involved in this scalping strategy. Now I want to walk you through a couple of case studies because showing you how to do it will always be clearer. So keep watching as I put everything together. For the following case studies, I will skip step 1 because it's not sensible for me to go back historically and identify any scheduled news event whenever there is a potential setup. But I think you should have already gotten the idea about the importance of checking the Forex economic calendar. With that being said, here's the first case study. We see that price is below the 200 period exponential moving average. Therefore, we only want to look for selling opportunities. We see price retracing and eventually hitting the 50 period exponential moving average. Price forms a nice bearish engulfing candlestick pattern, and that's our cue that we should take the trade. See how simple it is? This is why you don't need to clutter your charts with so many indicators. Now moving on to another case study. This time we have price trading above the 200 period exponential moving average. So immediately we know that we only want to be buying. Price retraces and hits the 50 period exponential moving average. But this time, price breaks the 50 period exponential moving average and doesn't stop. And because there was no valid setup, we wouldn't have entered the trade and lost money. Moving on to the next case study. This case study is similar to the previous one, except that price does eventually unbreaks the 50 period exponential moving average. We see that price is hovering above the 200 period exponential moving average, so we only want to be looking for long opportunities. Price retraces to the 50 period exponential moving average, breaks it and goes further down to test the 200 period exponential moving average. Price finds support and starts to bounce and eventually breaks the 50 period exponential moving average to the upside. In this case, we can enter upon the break of the 50-period exponential moving average. I hope the 3 case studies clarify any doubts you have, but if I wasn't clear about anything, do leave a comment down below and let me know if you have any questions. On a side note, do remember to do step 1, which is to check the Forex economic calendar for any upcoming news event. Here's a quick recap of this scalping strategy. Step 1. Check Forex economic calendar for news event. Step 2. Determine the directional bias by looking at 200-period exponential moving average. Step 3. Wait for price to retrace to the 50-period exponential moving average. And step 4. Look for price action confirmation and enter upon confirmation. At the start of this video, I promise you a secret sauce that can help you drastically increase your win rate. This secret sauce is to only trade scalping strategies during the active market hours where the market is volatile. Specifically, I'm referring to the London and US trading sessions. So what you can do is check the Forex Factory market opening hours and only look for setups during those periods. You can do this for other scalping strategies as well, not just for this one. The idea is that you want the market to be active and volatile and not get caught in a stagnant market where price doesn't move. And that's it for this video. I hope this helps you grow your small trading account. I would really appreciate if you could like this video and subscribe to the channel. Do remember to comment with the emoji plus win Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. If you want to learn other scalping strategies, then check out my other high probability scalping strategy videos in the end screen here. Thanks for watching.